Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn, and Kansas City wheat. Chicago wheat. The main activity here since December last year is twofold. However, before looking at those, there is a pattern in operation here that I've highlighted since last summer that still needs continuing highlighting. You see, some while ago I had pointed out the cat's ears pattern over June and July 2023. In essence, this is a double top formed in an overall downward moving market. The potential below for such a cat's ears pattern is target X2 in the 502 zone. For a while, during autumn last year, it looked like we would never get there. But since late November, and especially December last year, the market has gradually started to approach this potential pattern target. Anyway, between the end of November and December last year, the market tried pushing up through the combination at the time of the long moving average, currently at 621, and the bright red highlighted March 2022 to date downtrend, currently at 555. It tried twice, possibly three times, before in early January this year, heading lower again. The bright red March 2022 to date downtrend started to push prices lower, though it has been severely challenged, broken even. However, I have still kept it on my daily chart for one simple reason. It has this year been excellent at showing the bearish angle of attack. This bright red downtrend showed the way lower, such that this week we've had the lowest prices since August 2020, as we approach the 38.2% absolute Fibonacci line at 521. This 38.2% absolute Fibonacci line is something of an unknown quantity. All that being said, all this action since late December last year to late January this year allowed me to draw 4 weeks ago a new bearish shift pitchfork, highlighted in bright green on my daily chart. This, much like the broken bright red downtrend, also gives the overall bearish angle of attack, more or less, of the recent market, though it has been breached and almost broken on the downside. However, I favour it still along with the bright red downtrend until at least late April, when the bright red trend line will prepare to exit through the bottom of the downtrend, the shift pitchfork. So it will be interesting to see what happens then. Prices are right now in between the middle tie and above, currently at 562, and the lower tie below, currently at 538. This recent bearish shift pitchfork idea is repeated across some of the other grains, as you will see shortly. Chicago corn. The medium moving average, currently at 473, had been an effective cap on this market throughout 2023, most recently in October, November, and then December. When it was penetrated in December of last year, it still held down the market. Additionally to the declining medium moving average, we also have the same old congestion band overhead between 490 to 498, including the 2021 low at 498, plus the short medium moving average, which has exited down below that, currently at 457, and which had untangled itself from the medium moving average. This brings me once again to a more recent factor. In reaching target X at 424, the market had also reached and broke down through the important 50% absolute Fibonacci line at 425, which it has seemingly found difficult to swallow. though it also breached, though did not break, the next support below, which is the December 2020 low at 414. It is from there that we have seen a strong recovery, creating a nascent bull channel, currently 435 to 451, and moving up to challenge the seemingly significant nearby overhead resistance of the dark blue highlighted February 2023 to date downtrend, currently at 449, combined with the declining short medium moving average highlighted in green and currently 448. We've been challenging that today and pulling back a little bit at the moment. These two have been working together all this year, so it's significant, a significant attempt higher at least. As to whether it will succeed, well, that is a close run thing at the moment. But I would observe that we have not accumulated that much ammunition below, so it'll be interesting to watch. Please just still remember target X1 is still below. Kansas City wheat. My, oh my, there is still a hell of a lot going on here within a fairly narrow piece of action. Not in market price movement as such, but in a narrow piece of market angle of attack action. To explain once more, 17 weeks ago, I highlighted a feature I saw then, whilst I was looking at the action since August 2023. It was a descending expanding wedge pattern, currently 574 to down off the bottom of my daily chart, and is highlighted in dark blue on my daily chart. This is not the best example of such a pattern, but as I said 15 weeks ago, and I quote, it does hold merit, and I would look to this pattern for some immediate idea of the move downwards, end of quote. Well, it did, and still does, still hold merit, and has shown the way lower, but it wasn't an easy decline, having been pierced on a number of occasions. During its lifetime, I also seen the development of two new patterns, one of which involves the descending expanding wedge pattern itself. So, back in early December last year, we had an attempted move higher, but it ran into a combination of the upper trend line of the descending wedge pattern and the green highlighted declining short medium moving average, currently 602. Indeed, for a while, this pair of dynamic resistances held prices down. However, at the start of 2024, they started to separate, and accordingly, their combined strength, which was greater than their individual resistances, started to diminish. But not before being tested in late January, and it was the market, not the resistances, that gave way that time, and we saw the market head lower. Initially, I thought it might be a descending scallop pattern, but the market was, and is, too stretched out to be a descending scallop pattern. And so instead, we had, still have I suppose, we had and still have a descending triangle idea from late November 2023 to mid-February 2024, highlighted in purple on my daily chart. That's currently 589 to 600. 5 weeks ago, we had an attempted break out below this descending triangle, but prices hesitated enough that initially I thought we might have a triple or quad bottom, which now is looking more like a rectangle pattern in shape. I'm still not sold on what shape it is becoming. However, I can still lay out some ideas below for a break lower from the descending triangle. Thus, a primary target X would be in the 539 zone, with a secondary, hard to reach target X1 down in the 487 zone. Now, one final point. 2 weeks ago, I drew an early December 2023 to late January 2024 bearish Andrews pitchfork, highlighted in bright red on my daily chart. This Andrews seemed to be a better fit than the bearish shift pitchfork, but I do note the breach and seeming repair has happened this week. The market's at the moment just below the upper time, and that's currently at 568. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Service International Limited. And here comes the final important bit.